Well, I have to say, just in purpose of full disclosure, I know all these people pretty well, and so I'm probably going to pull some punches here. But to answer your question, I was quite surprised to see Mr. Druckenmiller write that essay, and that's simple, that op-ed, simply because he obviously worked with Scott Bessent and Kevin Warsh and all the rest, and it's a direct hit on the administration.
You and I could go for 2 hours on this without taking a breath. Let me get this in here because Alexis has 6 questions. As simple as I can, how does this constrain Chairman Warsh at Jackson Hole? And frankly, how does it constrain Chairman Warsh to the next and the next and the next Fed meeting to the end of the year?
So if you're talking about the bond market intervention, it makes Kevin Warsh's job harder. There's just no two ways about it, because the cost of capital is debt capital, risk-free capital is artificially low. And I think what Mr. Druckenmiller was saying this morning, which I agree with, is that the price mechanism underlies is just the bedrock of capitalism and regulating supply and demand. And so if you keep the price lower than it should be,
do you see how he does that? Yep. This is why we love having Jason in. Okay. He goes to the single sentence of the essay where I sat up and listened. I'll get to it in a moment. Alexis Christophers with Jason Trennert across America.
Let the bond market speak, right? That's what Druckenmiller basically said. But I want to switch gears for a minute. Stick with Bessent, though, because he talked yesterday about unleashing economic D-Day on Iran. Your thoughts on the U.S.'s plan here? Might it backfire? Are we on a collision course with China, as some analysts are saying?
And Alexis, I'll just be very candid with you. This is not my lane, okay? So, but by the same token, it seems to me like it might have a better chance of success than what we've been doing, which is, I think, unless you're going to this is my own personal opinion. I have no expertise here, but I think unless you're going to put boots on the ground, it's very, very difficult to use some sort of, as they say, kinetic, very kinetic approach and have it be successful. So this may indeed help in that regard to get what we want in the United States, which is a non-nuclear Iran. It might have a better chance of doing it. I think aside from that, we would have to have a more robust military intervention, and I don't think anyone really wants that, whether it's the president or the American people.
I want to stick with the economy and what's happening right now with how the U.S. is dealing with Canada and what that might mean for us here in the U.S., because we're already dealing with elevated inflation. This could, as Canada now promising these retaliatory tariffs, could raise prices here for the U.S. consumer. So what does this mean if it becomes this long, dragged-out trade war, as some are saying it might?
Well, at the margin, clearly, it will prompt inflationary pressures in the United States. And again, as I started off the segment by saying, I think prices are the best way to regulate supply and demand. And if you start adding to prices, adding to costs, clearly one would think that demand would go down. Now, I have to say I'm more sympathetic to President Trump's tariffs than a lot of people in my business, and that's simply because I kind of know where he's coming from. If you look at any of these so-called free trade agreements, they're 1,000 pages long and have 1 million cutouts for various special interests and all the rest. So there's really no such thing. I think in a perfect world, free trade would be great, and the free trade agreement would be a paragraph long, right? Or a sentence long, right? And we don't really have that, so there's just a reality, I think, that the president of the administration is addressing.
A nice lift to the market today, as Isabel Lee said, NVIDIA down 14, 20, 30 days straight. I'm kidding, folks. But anyways, a nice pop to the market. NASDAQ up 0.8%. Jason Trennert here on the Druckenmiller Bessent moment that we're in. Buried in that essay is a nominal GDP statement, which is that where the 10-year yield is right now is somewhat accommodative given our boom economy. The bottom line is we've got a nominal GDP like a banana republic, 5%. 5.5%. John Writing has consumption investment out at an 8% statistic here. We're not all that restrictive right now on our yields, are we?
No, and I think, and again, to spread some of the blame around, I think Fed policy in many ways is responsible for that since the global financial crisis, and that's because they had a perpetuation of financial repression and the use of QE, which, in my opinion, as Stan says in this article, it greatly encouraged congressmen to spend money they don't have, which they'll readily do. And that's both sides of the aisle, and that's happened for a long
But
period.
equal opportunity.
Equal opportunity. And I can tell you there's not a lot of people in Washington, just given my own wanderings down there, that really see this is a threat, our debt level, or really worry about it. And I'm not even sure they know that
Right.
the Fed has been bailing them out. In a way.
Jason, the heart of their optimism and the Bessent optimism is we will continue to grow through innovation, the classic Stiglitz equation that our growth rate will do better than our debt buildup.
Yeah, well, there's Reinhardt and Rogoff talked about the ways you get out of it.
I have Ken Rogoff and Jackson Hole folks. Last night, wandering through This Time is Different, that my first question to Rogoff and Jackson
Yeah,
Hole.
right, because as they pointed out, there are a couple of ways to get out of this. You just default. Well, we don't have to do that because we have the reserve currency. You can do soft default of inflation. You could take over another country and take their resources, like
Rename Lake Ontario. That would work.
or there, Greenland or something, right? Or you could raise taxes and cut spending, which I think would be probably disadvantageous at this point. Or you can grow your way out. And I think growing your way out is always the best way. Right now, I think it's the only choice we have because you can't raise tax. In my opinion, you can't raise taxes enough or cut spending enough
Right.
to make a big difference.
Alexis Christophers and Tom King welcoming all of you across the nation, around the world. Jason Trennert with us with Strategas Research Partners. Again, the way you choose to listen to us every morning, we thank you. 99.1 FM, Nathan Hager Radio in Washington. Good morning, 92.9 FM in Boston, Sirius XM across all of America and Canada, including Alberta.
Yes.
Which is a joke. I said is a 51st state. We'll talk about that in the 8 o'clock hour. But good morning, Alberta, on Sirius XM. Alexis Christophers with Jason Trennert.
So, Jason, with the Treasury now intervening in the bond market, what does this do to our credibility when on the world stage?
Well, it certainly, I would say, doesn't help. I mean, just be very candid. And I do think if I'm playing the markets, if I'm thinking as a speculator, I would be very careful in being short bonds here because the toolkit that Secretary Bessent has talked about is large, and there are a lot of things he can do to hurt bond shorts. From a long-term perspective, you're treating the symptom rather than
it's a Band-Aid
than the
in
disease.
essence.
Yeah, you're not dealing with the underlying problem, and that's not Secretary Bessent's fault or even President Trump's fault. It's a collective fault of Washington.
So if this is the landscape in which we're going to be navigating, and we're seeing now investors moving to other assets to hedge, gold has been up lately. Yeah. Bitcoin above $80,000 for the first time in 3 months, at least earlier today. I think it's pulled back a little bit now. Is that the way to move forward?
I think that's probably going to continue until anyone gets any religion on spending, which is to say, people talked about de-dollarization earlier this year. I think it's more de-fiatization because I don't see another fiat currency that will take the place of the U.S. dollar. But I do think hard assets, and I would put gold in that category much more than I would put Bitcoin, but be that as it may, they're both going up. And I think you're absolutely right, Alexis. That's where people are going.